Time for a look at the markets now. Thanks again to Forsyth Barr. Zoe Wallis, investment strategist, is with us. Zoe, good morning.
Good morning, Ryan.
International reporting season in full swing. Who have we got? Alphabet, Amazon, Disney?
Absolutely. Palantir, PayPal, a few other names in there. It's going to be a pretty busy reporting week. We're about a third of the way through international reporting season at the moment, and so far the results have been pretty solid, but we've seen some pretty big share market reactions last week, the likes of Microsoft and Meta going in opposite directions, despite similarly positive results. I guess a lot of sensitivity out there in terms of tech earnings and tech firm capex spend, so that'll be a key one to watch this week with Alphabet and Amazon coming out as well. So far, as I say, it's generally been pretty positive. We've seen some healthy margin growth coming through. We'll wait and see whether that continues as we head further into earnings season.
Right, let's get to some central banks. We'll start in Australia. They've got a decision this week. They're going to probably hike, right?
Yeah, absolutely. It's a bit of an about turn from where we were probably 6 months ago in Australia. What we've seen is that inflation data in Australia has continued to come in on the upside. So inflation's running hotter than in New Zealand at 3.8% year on year at the moment. And that data was probably the final nail in the coffin, convincing people that actually the Reserve Bank of Australia probably needs to take some action to rein in that hotter than expected inflation data. What we are generally expecting is the market's about 75% priced for a rate hike tomorrow afternoon from the RBA. And I think there's a similar split in terms of economists, with about 3/4 of them expecting to see a rate hike there. Given the commentary we've seen from Governor Bullock about concerns about rising inflation, and that is one of their key jobs, and that balancing that with the labour market as well, which is still relatively strong, I think that does warrant a move tomorrow. How much further from there remains to be seen about whether they deliver 1 or 2 or 3 hikes this year.
Yeah, so I find it fascinating because they were obviously a lot cruisier than us post-COVID. Didn't hike as high, kept things on a more even keel than us. We sort of stamped the hell out of it, trying to get rid of inflation. And even though we've been so brutal and worn our biggest boot, the damn thing's still here. Like, when does it go away?
Yeah, look, I think, Australia seems to be perennially the lucky economy, right? As you're actually seeing pretty solid growth and quite a different picture to what we saw here. Which means that the Reserve Bank of Australia hasn't had to cut as far to stimulate the economy as we've seen. And as you say, they've had a much smoother rate cutting and rate hiking cycle on the other side of it, probably. It just seems that their economy continues to tick along quite nicely, and that was driven a lot by what was going on with the government spending for the last couple of years. But actually, increasingly, you're seeing the public sector really pick up as well, and that's probably going to add to some of that inflationary pressure going forward.
Now, what about the ECB, Bank of England? They've also got decisions this week, right?
Yeah, likely to be relatively boring, dare I say it. Both expected to leave interest rates on hold at 3.75% in the UK and 2% respectively from the ECB. Look, still an easing bias for the Bank of England expected, but they need to see their inflation numbers come down further. ECB expected to be on hold. They're in quite a solid position at the moment. Inflation's running at around 2%, which is their target, and the economy's starting to show a few more signs of life.
Zoe, we've got labour market data coming out this week. What are you expecting?
Yeah, look, that's going to be the big focal point for local markets this week. Absent reporting season really kicking off as we head into the next couple of weeks here in New Zealand. So labour market data is expected to show the unemployment rate holds steady at 5.3%. We are expecting this is likely to be the peak in terms of the unemployment rate. So it's 5.3 in September, 5.3 in December expected. We should start to see things improve as we head into 2026, and more timely indicators are suggesting a pickup in terms of hiring and activity, but that is going to be probably quite gradual. And as we well know, the labour market tends to be a bit of a lagging indicator on the health of the general economy. So other indicators are suggesting a more solid pickup in terms of economic activity coming through so far, but the labour market does tend to take a while to respond to those.
All right, Zoe, appreciate that. Thank you. Zoe Wallis, investment strategist at Forsyth Barr. Thanks to our partners, Forsyth Barr.